Ever wondered how to navigate the financial maze that is life? Welcome to Financial Fitness 101, and in the following series, we're going to unravel the mystery of financial literacy. Financial literacy is essentially your money's instruction manual. It's understanding how money works and how to make it work for you. It's the compass guiding you through life's financial journey. So why does financial literacy matter? Picture a roadmap. Having one makes reaching your destination a whole lot easier, right? Financial literacy is that roadmap, but for your financial aspirations, without financial literacy, it's easy to stumble into financial pitfalls. Life can become a cycle of living paycheck to paycheck, wrestling with debt, and grappling with financial insecurity. It's a cocktail of stress and missed opportunities. Now for the silver lining, enhancing financial literacy is within everyone's reach. That's where this series comes in. We aim to equip you with the knowledge and tools necessary to command your financial life. You might be wondering what's on the agenda for this series. Well, we have a smorgasbord of financial insights waiting for you. Here's a taste of the topics we'll delve into: the nuts and bolts of budgeting, demystifying income, a deep dive into debt management, the art of saving and investing, the ins and outs of retirement planning, unraveling insurance and risk management, decoding credit and credit scores, prioritizing financial goals, how to sidestep financial pitfalls, the secrets to building wealth. Whether you're a financial novice or looking to polish your money management skills, there's a wealth of knowledge waiting for you. We're with you every step of the way. In each episode, we'll simplify these topics, offering practical tips that you can implement immediately. So buckle up for this series, and together we'll empower you to take the reins of your finances, paving the way for a brighter, more secure future. Thank you for joining us for this introduction to Financial Fitness 101. In the next episode, we're going to dissect the basics of budgeting, a cornerstone of financial literacy. You won't want to miss it, so remember to hit that subscribe button and like this video and share it while you're at it. And remember, financial fitness is just a hop, skip, and a jump away. Welcome back to Financial Fitness 101. Today we're diving into one of the fundamental building blocks of financial literacy, budgeting. But first things first, subscribe and promise us that you will like this video if you learn anything new. Budgeting is like the GPS for your financial journey. It helps you plan your route, track your progress, and make adjustments when necessary. Let's start with the basics. A budget is a financial plan that helps you allocate your income to cover your expenses and savings goals. It gives you a clear picture of where your money is coming from and where it's going. Another example. Let's say you want to save for a vacation, a new car, or a down payment on a house. A budget allows you to allocate a portion of your income to these goals. It's like setting milestones on your financial journey, helping you reach your desired destinations. Budgeting is essential for several reasons. Let me give you an example. Financial control. Imagine your income as a river and your expenses as tributaries. Without a budget, your expenses can quickly overrun your income, leading to financial stress and debt. But with a budget, you can channel your income into the right streams, ensuring you have control over your finances. Creating a budget isn't rocket science. It's about being mindful of your money. Here's a simple way to get started. Determine your income. Start by calculating your total monthly income. This includes your salary, any side hustles, or any other money coming in. List your expenses. Next, make a list of all your monthly expenses. These could include rent or mortgage, utilities, groceries, transportation, insurance, and any other regular bills. Be thorough, and don't forget those occasional expenses like birthdays and holidays. Categorize your expenses. Divide your expenses into fixed and variable categories. Fixed expenses are those that remain constant each month, like your rent or mortgage. Variable expenses, on the other hand, can change from month to month, such as dining out or entertainment. Set priorities now. It's time to prioritize your expenses. Your essentials, like housing and groceries, should come first. Then allocate some of your income to savings and paying down debt. Finally, consider discretionary spending for entertainment or dining out. Track your spending. Once your budget is in place, it's crucial to track your actual spending. This means keeping an eye on your receipts and bills. There are many budgeting apps available that can help with this. There are various tools available to help you create and manage your budget. You can use a simple spreadsheet, budgeting apps like Mint or YNAB. You need a budget. or even the old-fashioned pen and paper method. Choose the one that works best for you. Remember, a budget is a flexible tool. If you find that you're consistently overspending in a category, you can adjust it in your next budget. The key is to stay accountable and make your money work for you. Here's a handy budgeting technique called the envelope system. It involves allocating cash into envelopes for specific categories. For example, you might have an envelope for groceries, one for entertainment, and another for dining out. When the envelope is empty, you can't spend more in that category. That's it for today's episode on budgeting basics. In the next episode, we'll dive into understanding different sources of income and how to maximize them. Thanks for joining us on Financial Fitness 101, and remember, financial fitness is within reach. Ladies and gentlemen, welcome to another thrilling episode of Financial Fitness 101. Today, we're diving into the magnificent world of income. It's like a magic show where money appears out of thin air. But first, click on the subscribe button below and show us your support. We are always thankful for your help. Now, before we pull a financial rabbit out of a hat, let's talk about the sources of income. You see, just like magic tricks, income can come from different places. First up, we have earned income. It's the money you earn by putting in those hours at your job or working your magic in your business. Abracadabra, it's payday. Imagine you work in a regular 9-to-5 job. Every month, your employer magically drops a paycheck into your bank account. That's your earned income. Next, we have passive income. It's like a money-making robot that works without you lifting a finger. Passive income could be from investments, rental properties, or royalties. It's like having a bunch of little money elves working for you while you nap. Picture this. You own a cozy rental property. Every month your tenants pay rent and that money flows into your pocket. You didn't even have to wear a landlord costume. Then there's portfolio income. It's like playing the stock market casino, but hopefully with better odds. Portfolio income comes from buying low and selling high in the investment game. You buy some shares of a tech company, and as the stock value goes up, you sell them for a profit. Cha-ching, that's portfolio income for you. And let's not forget side hustles. Side hustles are like secret talents you didn't know could make you money. Whether it's freelance work, selling handmade scarves, or walking dogs, side hustles can add a little extra cash to your wallet. Picture this. You're a passionate home cook, and you start selling your legendary chili sauce at local markets. Suddenly, you're cooking up not just chili, but also extra cash. So now that you know where the money can come from, the next step is to make that money do the cha-cha into your bank account. We'll talk about that in our next episode, where we'll tango with savings and investing. Until then, keep the money magic alive. And remember, in the grand financial circus of life, you're the star of the show. Thanks for tuning in to Financial Fitness 101. And remember, it's not just money, it's the grand finale of your financial dreams. Welcome back to Financial Fitness 101, the YouTube online course that helps you get your finances in shape. In today's episode, we're diving into an issue that can be as scary as running into a ghost at night for many of us: debt. Now, don't mix that up with death, although considering how spine-chilling both can be, it's an easy mistake to make. Debt can come in many forms, from credit card debt to student loans, mortgages to car loans. It's important to understand the different types of debt and how they can accumulate over time. But don't worry, we're here to help you navigate through it all. So let's initiate our journey by dissecting the assorted species of debt. Credit card debt, like the popular kid in school, is one of the most prevalent forms of debt, equipped with soaring interest rates that can swiftly accumulate. Here's a chuckle for you. I once knew a guy who thought his credit card limit was actually his personal wealth. A hilarious misunderstanding, but a potent reminder of how easily we can misinterpret financial terms. Student loans are another major source of debt, often taking years to pay off. It's like the never-ending subscription service you never wanted, and it doesn't even come with free shipping. Mortgages and car loans are long-term debts that require careful planning and budgeting. They are the dynamic duo of adulting, or as I like to call them, the two musketeers of debt. They're here for the long haul, demanding careful planning and budgeting, and they don't take "I forgot" as an excuse. Now that we know what types of debt we're dealing with, let's talk about how it can accumulate. Debt can pile up faster than ants at a picnic through overspending, living beyond our means, or unexpected financial emergencies. Let me share a quick, humorous story with you about a chap named Benny. Benny was always a positive thinker. One day he saw a quote on a social media site which said, "Live beyond your means." Benny, being the eternal optimist that he was, figured this was his green light to live large and spend big, a motivational quote to live by. So Benny went on a wild spending spree, buying speedboats, luxury cars, and an upscale condo that he'd seen only in glossy magazines. The only Benny's paycheck was about as thin as a dieting pancake. As you can imagine, it all came crashing down pretty quick. Benny learned the hard way that living beyond your means is not quite the motivational mantra he thought it was. So it's important to chuckle at Benny's story and be mindful of our spending habits, creating a budget that allows us to live within our means, not beyond. But what if you're already in debt? No need for panic, are ways to manage it. One of the most effective strategies is debt snowball method. Now, don't get too excited. We're not talking about a fun snowball fight to erase your debts. This method involves paying off your smallest debts first, then using the money you would have spent on those payments to go at your larger debts. It's a snowball effect that can help you roll down the hill of debts much faster. So while no real snowballs are thrown, you do get to knock out your debts one by one. Another strategy is debt consolidation, which involves combining multiple debts into one loan with a lower interest rate. This can make it easier to manage your payments and potentially save you money in the long run. Remember, getting out of debt takes time and discipline. It's important to stay committed to your financial goals and make smart choices along the way. And always remember to seek professional advice if you're feeling overwhelmed or unsure about your financial situation. That's it for today's episode of Financial Fitness 101. We hope you've learned something valuable about debt and how to manage it. Join us next time for more tips and tricks to help you achieve financial success. Don't forget to subscribe to our channel for more content of how you can learn financial discipline and achieve financial freedom and make money online. And remember, managing debt is like going to the gym. Both might make you sweat and pant, but the endorphins and freedom from debt aches, oh, they're worth every drop of that sweat. Stay financially fit, folks. Welcome, folks, to the 5th episode of Financial Fitness 101. I hope you have enjoyed your journey here, but just wait, the best is yet to come. Have you ever wondered how to grow your money? Allow me to introduce you to the magical world of saving. You see, saving is not just about hiding your money under the mattress. It's about planting your money seeds in rich soils for them to grow and multiply. So let's look at the typical saving account options. Imagine different savings accounts as these fertile soils. There's the regular savings account, the humble backyard garden, a good starting point. Then we have the high-yield savings account, the equivalent of a lush, well-tended farm offering better growth. And finally, there's the certificate of deposit, a sort of time-locked greenhouse where your money plants thrive in a controlled environment. Now consider a chap named Pennywise who saved a penny a day. Years later, he's not just sitting on a hill of pennies. He's got a veritable mountain range of coins. Why? Because he understood the magic of making his pennies work for him. So saving money isn't just about stashing away your extra pennies, it's about making those pennies work for you while you nap. Let the money live a parallel life and multiply on their own while you just live your life. All right, now that we've introduced the concept of saving, let's dive deeper into how savings accounts work at banks. You see, when you deposit your money into a savings account, you're not just storing it away, you're actually lending it to the bank. The bank then uses your money to give out loans to other customers, and in return they earn interest. But here's the kicker, they share a part of this interest with you. This is the profit you earn on your savings, and this is how your money starts to grow. But remember, not all banks are created equal. Different banks offer different interest rates, so it's important to shop around and choose wisely. The higher the interest rate, the more money your savings will earn. So by choosing the right savings account, you're not just saving money, you're growing it. Remember, in the world of finance, every penny counts. So make sure your pennies are working as hard as they can. Now that we've talked about saving, let's dive into the world of investing. Think of investing like owning a magical golden goose. You feed it, nurture it, and over time it starts laying golden eggs. These golden eggs are your dividends and capital gains, and they are a source of passive income, which means you earn money even while you're snoozing. Isn't that splendid? Now you might be thinking, great, I'll just get a bunch of stock in one company. But imagine if something happened to your one precious goose. That's why diversification is key. Spread out your investments across different types of assets, stocks, bonds, mutual funds. It's like having a flock of golden geese, each laying eggs at different rates and times. Investing can be a bit like a roller coaster ride with ups and downs, but remember, the aim is not to get off at the highest peak. Instead, it's about enjoying the ride and collecting those golden eggs along the way. Remember, investing is not about getting rich quick, it's about consistently laying golden eggs over time. So, you've started saving and investing, but what about those unexpected expenses? Picture this. Our friend Bob, a comic book aficionado, had to sell his prized first edition of Superman versus the Alien Invaders just to pay for an unexpected car repair. Oh, the horror. The moral of this tragic tale? It's crucial to have an emergency fund. An emergency fund is your financial safety net stashed away for those rainy day situations. Think of it as insurance against life's little surprises like Bob's car repair, health emergencies, or sudden job loss. But how do you build this superhero of savings? Start small. Put away a portion of your income each month. Even if it's just enough for a cup of coffee, it'll grow over time. Automate these savings if possible, making it a hassle-free process. Having an emergency fund is like having a superhero in your back pocket, ready to save the day when you need it most. So we've covered saving, investing, and building an emergency fund. But where are you headed with all this? Let's talk about setting financial goals. This is the map that guides your financial journey. It could be anything from saving for a dream vacation, buying a house, or even retiring early. Imagine our friend. Let's call him Bob. Bob had a goal to buy a vintage car. He didn't just wake up one day and buy it. No, he started by setting a goal. He calculated how much he needed. Then he started saving and investing bit by bit. It took time, but eventually he was able to buy that vintage car he'd always dreamt of. Why? Because he had a goal, a purpose for his money. This is the power of setting financial goals. It gives your money a purpose. It makes the whole journey to financial fitness much more rewarding. Setting financial goals gives your money a purpose and makes the journey to financial fitness much more rewarding. Tune in next time for episode 6, where we'll delve into the world of retirement planning. Until then, keep those pennies working. Don't forget to subscribe to our channel and give a like to this video. This simple act, while cost nothing to you, can mean the world to us. It keeps our work funded and helps us to deliver even better lessons for you in the future. And we would deeply appreciate if you just comment a simple word of thanks below. See you in the next episode. Scene script. Have you ever thought about how you're going to live when you retire? Imagine yourself at 80 still hustling, not because you're the next Mick Jagger, but because you didn't plan your retirement. Now that's a Rolling Stones concert nobody wants to attend. Retirement planning, my friends, is not just about deciding which Hawaiian shirt to pack for your endless summer. It's about understanding your financial needs for the future and making strategic decisions today. Think of it as a time machine for your finances. We all dream of a future where we're sipping margaritas on a beach, not worrying about bills. But that dream can quickly turn into a nightmare of endless work if we don't plan ahead. It's like forgetting to pack your sunscreen for a day at the beach. You're going to get burned. So unless you fancy working until you're 99, let's dive into retirement planning. Think of retirement accounts as your golden egg for the future. Imagine two friends, let's call them Jack and Jill. Jack, a diligent saver, funneled a portion of his paycheck into his 401k every month. Over time, thanks to the employer match and the power of compounding, Jack's nest egg grew. By the time he retired, he was comfortably cruising around the world, living his golden years in style. Jill, on the other hand, had an individual retirement account, or IRA. She contributed occasionally, but didn't fully comprehend the tax benefits, nor did she understand how to invest within the account. Consequently, her retirement fund didn't grow as much as Jack's. Her golden years, unfortunately, were not as golden. These stories highlight the importance of understanding your retirement account options. Whether it's a 401k with its employer match and high contribution limits, or an IRA with its potential tax deductions, each has its own benefits and drawbacks. Choosing the right account could mean the difference between sipping cocktails by the beach or counting pennies at home. Now let's talk about a magical concept. Compounding. Imagine you're planting a tree. You water it a little every day, and over time it grows. Not just upwards, but its roots deepen, its branches spread, That's compounding. Your investment's growing not just from the initial amount you put in, but from the returns they've already made. Let's take an example. There was this janitor, right? And not a high-flying executive, just a simple janitor, but he had a secret. He understood the magic of compounding. So every month he'd squirrel away a bit of his earnings. It wasn't much, but over time it grew and grew and grew. Until one day, he wasn't just a janitor, he was a millionaire janitor. That's the power of compounding. It's not about having a lot to start with, it's about starting and then letting time and compounding do their work. Remember, every little bit helps when it comes to retirement. The earlier you start, the better. We've covered a lot today, but remember, retirement planning is a marathon, not a sprint. It's all about taking steady strides towards the future you. We talked about the importance of planning for retirement and the various options available to you. Remember, 401ks, IRAs, they're your golden eggs for a comfortable sunset period. The magic of compounding is your secret weapon. It's like a snowball rolling downhill, growing bigger and bigger with time. It's never too early or too late to start. Every penny saved today is a step towards a worry-free retirement, but don't go it alone. Seek professional advice if you need to. It's okay to ask for directions on this journey. If you found this video helpful, please subscribe, like, and comment. We've got plenty more golden nuggets to share in our next episode, all about insurance and risk management. Until then, keep planning for the future you. Welcome back to Financial Fitness 101. This is our episode 7, and we're tackling the ever so confusing topic on insurance. If you just joined us in this video, please do check out the entire playlist to view all the lesson in this online YouTube course. Ever scratched your head at the mention of insurance, wondering exactly what it is? Well, let's clear up the confusion. Picture insurance as your financial safety net. It's like having a superhero, but instead of fighting off villains, it shields you from potential future financial losses. Let's consider an example to better understand this concept. Imagine you're a car owner. You pay a regular amount, known as a premium, to an insurance company. In return, if you unfortunately find yourself in a car accident, your insurance company covers the cost of the damages. Now you might ask, why would I pay for something that might not even happen? Well, that's the beauty of insurance. You're essentially paying a small fee regularly to avoid the possibility of a massive, unexpected cost down the line. So in a nutshell, you're paying a small amount regularly to avoid a potentially huge cost in the future. Insurance, my friends, is your financial superhero ready to save the day when you need it the most. Now, insurance isn't just for cars. There are more types than you can shake a stick at. Let's dive right in, shall we? Picture health insurance like a safety net on a trapeze. You're swinging along, performing your daily routines, when suddenly you fall ill. That's the unexpected tumble. The safety net catches you, mitigating the hard fall that could be hefty medical bills. It's there to cushion the impact and help you bounce back. Next, imagine life insurance as a financial cushion for your loved ones. It's like leaving behind a treasure chest full of gold coins. If you were to make an untimely exit from the stage of life, this treasure chest ensures your loved ones aren't left empty-handed. And then there's auto insurance. Think of it as a personal mechanic who's always on call. If your car decides to throw a tantrum in the middle of the highway, this insurance swoops in to fix things up. Different types of insurance cater to different aspects of life's unpredictability. Now you might ask, why should I bother with insurance? Well, my friend, it's all about risk management. Imagine being a tightrope walker high above the ground, performing without a safety net. The thrill might be exhilarating, but one misstep could spell disaster. That's life without insurance. Risk management is the safety net that catches you when you fall. It's about anticipating potential risks and having a plan in place. Just like our tightrope walker wouldn't perform without a safety net, you shouldn't navigate life's high wire without some form of protection. Insurance is that protection. It's your financial safety net there to catch you when life throws a curveball. It could be an unexpected illness, a car accident, or even the loss of a job. These are risks we all face, and having insurance helps mitigate the financial impact of these unforeseen events. Having insurance is like having a financial safety net, catching you when life's unexpected events knock you off balance. With so many insurance options, how do you pick the right one? Don't worry, it's not as tough as choosing the winning horse in a race. It's all about understanding your needs, financial situation, and potential risks. Let's start with your needs. What do you want to protect? Your health, your life, your car, or perhaps your treasured comic book collection? The answer to this will guide you towards the type of insurance you need. Next, consider your financial situation. How much premium can you comfortably pay without compromising your lifestyle? Remember, insurance should provide a safety net, not a financial burden. Also, don't forget to consider potential risks. If you live in a flood-prone area, you might want to consider flood insurance. Finally, evaluate the insurance company's credibility. Are they renowned for their customer service and claim settlement process? Choosing the right insurance coverage is about finding the best fit for your individual circumstances and ensuring that you're well protected against life's curveballs. We are so glad to have you on this journey. Please subscribe if you have not, and like if you found this video informative. Also, don't forget to leave us a comment on how much you have learned from this series.